Thank you for joining. This webinar will begin in a few minutes. Thank you for joining. The webinar will begin in 1 minute. Thank you for joining. The webinar will begin shortly.
Okay, here I am. I'm rejoining. Okay. I think I'm back. Apologize for that. We all go through technical difficulties with these webinars, and we appreciate your patience. Thank you and welcome. Katie Brooks, CEO of the Bend Chamber of Commerce. And I want to welcome all of our panelists and those of you who have joined us for this webinar on the impacts of COVID on the real estate market and the lending market. We have a very full presentation to give to you today and 3 great panelists. So I'm going to hurry through this intro so we can get right to the meat. Before I get started, I do want to mention that the governor's office yesterday announced that phase 2 reopening protocols will be released. I know Deschutes County has applied to open under phase 2, so stand by on that, on whether or not our application is accepted. You can find all the new guidelines. We'll post them as soon as they're done on centraloregonsos.com. And last reminder is, if those of you are still inclined to help local businesses get through these tough times, bendsos.com is still up and running, where you can connect with your favorite business in Bend and purchase gift certificates and future credit. So we'd like to thank our partners in real estate, Schwabe, Williamson and Wyatt, Compass Commercial, and Cascade Natural Gas. They've been great supporters of the Real Estate Breakfast, which got pushed out this year, and just want to reach out and say thank you to those folks for continuing to support stuff like this. Today, at the very end, as always, we'll have ample opportunity for folks to ask questions. We do have 3 presentations, so we're going to wait until the end. I'll monitor the Q&A box. It's the Q&A box, not the chat box down at the bottom. If you have a question, log it in, and I'll do my best to ask the questions at the end of the seminar. So today we have 3 experts in the area of real estate selling, buying, and lending to discuss the impacts of COVID-19 on the market and the process of buying and selling. After we hear from each, we'll open the floor for questions, as I mentioned. So we'll begin with Kim Gammond. She is the Communications and Public Affairs Director for the Central Oregon Association of Realtors and the Multiple Listing Services Central Oregon. Kim has a presentation for us on the most recently released data for Bend and the region and the nation. And we'll look at her crystal ball, or she'll share with us what's in her crystal ball about what we're looking at in the next 6 to 12 months in the Bend and Central Oregon market. And we're really, really grateful for you being here, Kim. Why don't you take it away?
All right, good afternoon. I'll go ahead and get my screen up. All right, there we are. So we entered the current market that we're in, coming off of a first quarter that was phenomenal. It was a robust real estate market. We were looking at a pretty high transaction level for 2020, low interest rates, and everyone was feeling pretty good about where we were going to be going forward. And then at the end of March, obviously, we went into the stay home and stay safe order, both here and then in various capacities across the country. And that had fairly immediate impacts on our market. So particularly, we're looking at a couple main themes. Flat median sales prices, sharp dip in solds due to April low pendings, then in May, a rebound of pendings, and you'll probably hear this several times today, a very low inventory. So the number of homes for sale in Bend right now, and we're looking at single family homes, condos, and townhomes for all these stats. The number of homes for sale in May of 2020 is down 60% over last year. And that's, you know, a pretty phenomenal number, even going into the summer. Looking at some similar markets, in Medford, it's down 67%, and then in Redmond, it's down 51%. So it's fairly consistent kind of throughout our region. This is a little bit more than what we're looking at nationally, but we already had some pretty low inventory numbers coming into this pandemic. So our new listings, and this is obviously what drives our overall inventory, are down 44% in May. In Medford, they're down 48%, and then in Redmond, they're down only 26%. So we are seeing some differences in the market there. In Redmond, you're probably looking at more new construction homes and vacant homes coming on the market than you are in Bend. And then this is where the numbers get interesting. So after some pretty deep dives in April for pendings, it's risen 60% in May over last year. So this is both going to be a natural rise as we go into summer of pendings, but also that pent up demand we had from very little market activity in April. So going into June, we're going to be looking at what are these pendings? Is this stay over 50%, or do we come down to more of a normal market? And then you can see in Medford and Redmond, we're seeing similar pretty sharp rises in those pending numbers. And then after that bad market in April, we're seeing that dip in the total number of homes sold. which is at 44%. So right now, if you're looking at sold numbers, always remember those are numbers that are 30 to 60 days, 90 days into history. So that's why we're really looking at the pending numbers to tell us what our market's looking like. And this is the kind of flatlining median sales price. So in Bend, we're up to only 2.1%, and then about double that in Medford and Redmond. So that's compared to the past couple of years where we'd be looking at somewhere between a 5 and 10% median home price. That's pretty flat, and there's some implications particularly for buyers on that. And then our average days on market. So days on market is looking at the number of days from the day your home goes pending to the day it actually sells. And that's down 29% to 47 days. So it's interesting to see these sharp declines in days on market while we're in a time of uncertainty and just crazy inventory numbers. So that's another number we're going to watch pretty closely. As you can see in Medford and Redmond, it's down 50%. So there's definitely some changes happening in the market there that are impacting our closing. And then drawing out new construction. So all those other numbers are for the resale home market and the new home construction market. New construction represents about 5 to 15% or 15 to 17% of all listings in the multiple listing service. So it's not a huge part of our market. The resale market's the stronger part, but we can see some trends happening there that are almost a little different than the overall market. So the median home price is actually up 5.6% compared to last year for new homes, and that's at about $450. And so it's a little bit less than the overall market, which is at about $490. But that rise is significantly more than the overall market, which is at about that 2%. So we are seeing new homes rise in value faster. New construction listings are actually up 7.7%, and that could be a reflection of April and also just a lot more new construction and happening right now. And then new construction pendings are only up 36%, and then new construction solds, again reflecting that April, are up 50%. So we're seeing some differences there, particularly in the rise of new listings compared to the number of pending, and then that median home price. So there is a difference when you're looking at new construction versus resale and the type of market you might be in. Looking at some predictions, especially nationally, these are from Realtor.com, which is the kind of leading home inventory site across the country. So they're predicting that for 2020, home prices are going to flatten with a forecasted increase about 1.1%. We are seeing higher median home price increases here locally than we are nationally. So I think we'll end up more in a 4 to 5% median home price increase here in Bend. So a little different than the national numbers. And then this theme of inventory will remain low. We're definitely going to see that. And then their prediction is the rate of decline steadies, which could definitely happen here, but they're seeing a mix of homes that are for sale shift more to lower priced homes. And this is a prediction I'm not sure we're going to see, particularly in Bend, just because we don't have in our total inventory of homes in Bend a lot of lower priced homes. So that inventory, that it might pick up a little bit, but I don't think we're going to see our overall market shift towards the lower price homes. And then home sales are constrained by low inventory and diminished seller and buyer confidence. So we talk a lot about seller and buyer confidence. So much of going forward in our market and every market is going to be, are sellers willing to put their homes on the market and have showings, and do buyers feel confident in investing their money? So the next couple months and how we go through the next phase, particularly in Oregon, is going to determine a lot of that. And Brian's going to talk a little bit more about where we're seeing interest, but do we see this influx of buyers from out of market, and do they feel confident moving across the country or across state lines? So we're really going to start seeing those in the June numbers, and to see where people are coming from and what they're thinking, and whether the good news in May is reflected going into the summer. that is it for me.
Great, Kim. Thank you so much. There's a lot of good content in that presentation and a lot of guesswork, I know, trying to read the tea leaves as we move forward. But thank you for that. So next up is Brian Ladd. He's a principal broker for the Ladd Group at Cascade Sotheby's International Realty. And he brings years of experience to help us understand how things look different for buyers and sellers now than before COVID, and considerations for the future. Brian, we're looking forward to hearing what you have to say. Why don't you go ahead?
Well, hey, thank you for having me. I think these are very important. It's been a wild couple months, and it's great to see all these attendees here too, because getting into this data gives us all a framework for how we interpret what's happening. So I'm really excited to dovetail into the presentation that Kim just went over, and then maybe add some anecdotes. So can everyone see my screen here at this point? Looks like we've got that up. So what I want to first talk about is how this affected sellers, how this affected buyers, and how it's changed over time. And it's changed quickly. So let's go back to early days, which was not that long ago, but this was March and April. And what we saw was an absolute dramatic constriction of the amount of showings and sales with this pandemic and the stay home, save lives order. And what I found my job and most of the people in our industry was really just our job became reassuring our clients that this was not 2008 all over again. So many people quickly had that knee-jerk reaction that the sky was falling, because the recession that we saw in 2008 strongly affected housing, and this one was very different. And I don't want to get too deep into the data, but this housing was affected by this pandemic and recession, not the cause of the recession like it was back in 2008. And this massive housing shortage that Kim was talking about will really lead the economy out of the recession through construction and sales, rather than being a weight on it. So it's a very different world, and we found our time as our value in that time of really reassuring our clients, because sales were down dramatically. And, it was all about managing expectations. And during this time, this is where sellers learn to utilize strict health protocol for showings, including booties and gloves and masks and all those things. And it was a really interesting and learning time for all of us. So this this chart shows it well. What this shows is 2020 is the orange line, 2019 is in the blue line, and this was the amount of showings nationwide. And what this shows is that we saw about a 50% decrease in the amount of showings as we got on into March, with our trough, our bottom, in the mid part of April, second to third week of April. And this was a very disconcerting time for our sellers, but it's recovered quickly. So what I want to get into is, what does the market look like for sellers right now? And what we're seeing is that obviously sales have recovered. The industry has creatively responded to the new normal, and we've all learned how to do virtual showings, offers, contracts. We just sold a property the other day for a client who's actually never even seen the property in person, and not just put it under contract, but they're closing on it. So it's a brave new world. But this is really being driven by the extreme lack of inventory that we're seeing in the market. And this is not only because of the pandemic, where people do not want to put their homes on the market, but it's a historical trend that we're dealing with across the nation. That little chart I have on the bottom right shows that usually about 6 months of inventory, which means no new homes come on the market, we sell through that inventory in 6 months, is a good balance between buyer and seller forces. But right now we're less than 3 months, and we just don't have enough homes to go around. So sellers are in control a little bit, but buyers are still price sensitive. Obviously, we have a lot of economic disruption. There's income disruption, there's qualifications for loans, et cetera. So you have to price your house correctly. But if you do, there are competing parties that are interested in this home. And but once again, I want to caution the sellers on how to respond to that, because what we're finding is there's a little bit of panic in the market right now with buyers, and we're seeing competing offers going for these homes. But often when someone is in a competing offer situation, they'll often increase their bid just because they're panicked that they're not going to get a home. and they end up with a house or it under contract, but it's not necessarily the right fit for them. And I've seen both on the buyer and sales side where 2 or 3 contracts stack up in backup position, and then all of them eventually terminate. And then I've even seen come back around, and someone who was in first place who canceled after 3 more buyers, they came back around and rebought the house. So as a seller, I think you need to price correctly. And you also need to really dig deep and try to find out who the buyer is that really is pre-qualified and really wants your house for your house's quality, not just because other people can't get it. This is a chart, I think this helps tell the story. So the chart that we just looked at showed the 50% reduction in showings in April. We're back to 2019 amount of showings. So the resilience in the market and the demand that the buyers are showing is stronger than most people would have predicted. And I think it shows right here. So let's talk about buyers a little bit. So what I think is buyers definitely have an opportunity. As scary as it is with the limited inventory, buyers have an opportunity to buy at stable prices in what otherwise would have been a booming year. If we look at our first 3 months of 2020, this year was going to be an absolute record in all levels, prices, sales, et cetera. And we got a little bit of a timeout. This was a couple month timeout in the market, and there's still an opportunity for buyers to get a home at a relatively stable rate of appreciation this year. And then I think that combined with lower interest rates make it an interesting year to buy a home and secure your place in Bend. But there's a lack of inventory that's going to be a challenge to find your home. And this now more than ever, I think it's important that you do all your homework ahead of time. You need to understand the market, you need to set your expectations and really understand what's going on. And so that when you go out in that market, hopefully pre-approved for a loan, you can actually secure the home you want. And so, but I always want to go back and say, just because of all these factors that are going on, housing is still a long-term investment, and panic's not a reason to buy. And if buyers are feeling panicked and like they're having to buy because there's limited inventory or there may not be future opportunity, that's when I usually counsel to, let's take a deep breath. Hopefully inventory will grow later this year. Generally, we see the peak in inventory about this time of year in that May, June. But I think it's going to come later this year. So hope we see more inventory later. And then I'm looking forward to hearing what Derek says. There's not a big forecast that interest rates are going to spike back up. So I think that you have some time to get your wits about yourself, understand the market, and get involved. So let's talk about how this market is responding and what kind of resilience it's showing. What was interesting to me is when this market first crashed and it showed up in the stock market, my prediction was that the upper end buyer was going to be the one that suffered the most because of that stock market correction and that net wealth, net worth contraction. But what it quickly showed is that was probably the most resilient part of the market. And in hindsight, it's obvious. This was the demographic that was less affected by layoffs in the economy, and they were the first buyers to come back in the market. That said, the market recovery now has spread throughout the whole price chain, and all price ranges of housing are seeing more buyers. And I think also the buyers are reassured that the prices are not crashing. They didn't want to make a mistake, buy into housing as it crashed. And I think we now have enough of a track record that they understand that it's not going anywhere. In fact, there's a lot of demands that on that housing stock, and we're going to see future price increases probably, and they're engaged again. What we're also seeing is we're seeing trends towards larger homes. For a while there, we saw trends where a lot of people were preferring smaller homes, but this sheltering in place, and I think everyone has a personal story that they can talk about of trying to do a business call with people running around their house and dogs barking. We're getting demand for homes that are larger, homes that have home offices, extra bedrooms, or even larger yards. And then we're also just kind of getting a general sentiment that people want to move on with life and get going again. So that's what we're really seeing in the market. And then the elephant in the room that we need to talk about is what's happening with this pandemic and how people want to live. And so we started getting anecdotal stories at the beginning of this pandemic that people were over cities. They wanted to get out of the cities, but we're starting to see it in the data. So some of these headlines that I'm showing you, early on, 45 days ago, people were saying, hey, people are learning to be remote. Businesses are okay with allowing their people to move, but we weren't seeing it in the data yet. But the data is starting to hit. There was an article that came out in the San Francisco Chronicle where rent prices just plunged by 10% in San Francisco in 1 month. That's unheard of. What we are seeing is we are seeing urban flight. People are not wanting to be in these dense cities during times of pandemics. And all these businesses have learned that people can effectively work remotely. And we're already at the epicenter of that. You know, we've already been titled the telecommuting capital of the US. And I think we've got a big target on our housing stock, and we're going to see a lot of future demand coming our way. So, you know, kind of how do I see this looking forward? I'm going to give some caveats. So unless housing inventory grows dramatically through increased building, which is a challenge and not probable, or resale activity with citizens leaving Bend happens, which is unlikely, or the economy or unemployment get drastically worse, and I guess it's possible, but no one's projecting that. Unfortunately, we're going to see continued pressure on our housing stock, which should support, if not push prices higher. So as much as, you know, a lot of people were hoping this was a timeout and there's going to be a contraction in prices and things like that, what I'm seeing is just continued demand and pressure on the housing that we have available here in Bend. So if you guys have any more questions, I'd love to answer them at the end, but hopefully that gives you, you know, kind of what we're seeing on the ground with our buyers and sellers.
Thanks so much, Brian. That's really interesting. I would bet that there's more than a little bit of unpredictability sprinkled throughout that, but wow, some
yeah, and
yeah, great stuff. Thank you so much. Next up, we have Derek Meyer. He's a loan officer with PrimeLending. He's going to walk through the lending end of the projections and the impacts of the COVID lockdown. So Derek.
Hey, thanks for having me. Can you guys hear me okay?
Yep.
Can everyone hear me okay? All right, let me see if I can share my screen. The good news is you don't have to see all the same amount of information oh goodness. Am I doing that right? You got it? How's that? Can you see my screen okay? All right. So yeah, so in our world, it's a little bit different than kind of just stats and numbers. I kind of want to roll up our sleeves and just talk about loans in Central Oregon as a whole, and then the loan buying process for us. So it's really a 3-track process for us. So in reality, there's what Brian was saying, how we have pressure on home sales in the upper end market, but in the lending world, we actually have conventional loan limits and loans there, jumbo loans, and then what are called non-agency loans. So there's really kind of a 3-track process for us when it comes to that. So, you know, when we make a conventional loan, which is what majority of Central Oregon has, that's a conventional loan limit of $510,400 and below. So any loan amount that's $510,400 below is considered a conventional conforming loan, okay? How that works is we can underwrite to Fannie Mae and Freddie Mac on the open market and sell to servicers. So with that being said, the rates are a little bit more generous. The guidelines are a little bit better. They're a little bit easier to work with. So, but we're going to talk about kind of what that all looks like. So the second portion is also jumbo loan. So any loan amount 510, 400 and above is considered a jumbo loan. A lot of the banking institutions, US Bank, Wells Fargo, Chase, those large banks, they tend to hold those on the books and keep those on their books and hang on to them. So those restrictions pre-COVID were great. We're fantastic, and now post-COVID they're a little bit more restrictive. So we're going to talk a little bit about that. And then the third track that I kind of want to discuss today and the changes that have ensued are the non-agency, non-conforming loans. So these are any loan amount that might fit, that will be somewhere in the 510 or the jumbo range, but just are slightly off kilter. As an example, a foreign national buyer, someone with high income and small down, or someone with high income, high assets, poor credit. Or a specific example would be like the Fire Hall condos here in town, where it's a big portion of its commercial loan, commercial building, and then there's residential condos up above. These are examples of non-agency, non-conforming loans. So we have 3 tracks to talk about real quick. So the first track, and talking about how the the lending process has changed for conventional conforming loans. Right off the top, the underwriting process. So when I make a loan or I originate a loan, I sit with the borrower and we analyze their documentation and we send it out. We send it to the underwriters. Right now, underwriting is a little more skittish. They're a little more nervous. And what they're looking for is a little bit more restrictive than what they may have done before. So anything that kind of makes their ears perk up or looks a little off has them in a slightly uncomfortable state. So the underwriting process has come under scrutiny a little bit more. And the reason for that is primarily because we are holding on to our loans right now. We want to make sure that we've got them packaged up nicely. The borrower is able to repay, and when we sell them back on the open market, they'll be a good value. The second piece that's really kind of a bit of a grind right now for us is the employment piece, which a lot of you folks on this call either are affected or know someone that is affected. In my world, there's the furlough piece, there's the unemployment piece altogether, collecting unemployment, and then there's a temporary leave. So there's really kind of three situations that are going on right now with that. So we have been fortunate enough to where the Fannie Mae and Freddie Mac guidelines are kind of loosening that dial a little bit for us. We're going case by case, checking to see if they've been on furlough and they're back working full time, can we get an employment letter indicating as such, and kind of omitting the fact that they've been off work for the last 5 weeks. An example of that is I have a flight instructor who has been making great money all year long. He's been furloughed for the last 6 weeks and now he's back to work full time. We're basically able to look at the information that temporary leave and bring him back online and get him the full-time type of income that he had before. The other kind of weird nuance on our end with employment is we used to be able to just call the employer 10 days in advance to prior to the loan closing, whether it's a refinance or a purchase. And now we have to call the day before the employer. So if somebody's off work or out of the area or working remotely, that's put a little bit of stress on my team, the process itself. And then we actually have to call the borrower the day of closing as well and say, are you still employed? Which is a little bizarre, but it kind of just is what it is. So that's been a little bit different. From the appraisal side, we are seeing a lot more flexibility on the appraisal side with regards to kind of Fannie Mae and Freddie Mac in that conventional world. They're allowing desktop appraisals. So an underwriter can just determine that the value of the home based on the sales of the area and the creditworthiness, the stability of the borrower, if that value works for them. They're also allowing what are called drive-by appraisals as well. The drive-by appraisal is just the process of the appraiser driving by and then grabbing some reliable information from the MLS here locally and perhaps some interior photos of the listing itself or the pre-listing or the fact that it's been sold. So that is kind of some different aspects of the appraisal process for us. So they're allowing desktop underwriting, they're allowing just drive-bys and external appraisals as well. So that's kind of interesting from a conventional standpoint. So they're doing their part to try to allow social distancing. The biggest component for us, at least here at PrimeLending, is our turn times. So there is a massive influx of refinances right now, and the purchase market is strong. I mean, you're listening to what Kim is saying, what Brian's saying. There's a ton of resiliency in this market, and there's a ton of pressure on the amount of buyers that are coming in versus the inventory that we have. So that's still in full existence. But with that comes the fact that our underwriting is slightly slower in some scenarios because of the fact that we have refinances going and purchases going. There's a slightly reduced workload. And that whole process is a little bit bottlenecked right now. So we're asking for 30 days, 45 days on conventional purchases and 60 days for jumbo loans if possible. I know that the inspection process, I was talking to an inspector yesterday, they're about 10 days out. So if you've got an inspector that's 10 days out and you've got an appraiser that's 10 to 12 days out, and my underwriting turn time is 5 to 7 business days, depending on the day of the week and the workload, you can see how that puts a lot of pressure on a 30-day close. There's a lot of people involved on that. So as well as title and escrow, they've got a reduced workload. So their title reports, just the amount of information that they're having to process right now is also kind of slowing that process up. So that's how conventional loans are. That's what majority of my conversation is today. That's where majority of the conversation lives in Central Oregon for the change. Jumbo loans are much more restrictive right now. I find it ironic, Brian, saying that market is growing, and I will agree. However, my world, at least at PrimeLending, and I encourage you to shop around to the other local lenders here in town, they're phenomenal. But my world, when it comes to jumbo loans, is much more restricted. Pre-COVID, I had about 25 different jumbo investors I could make a loan and sell to. Post-COVID, I'm down to about 5. So a lot of those restrictions that are that everyone kind of loosened up on are now back in place. An example of that would be, I had a 15% down buyer that was a first-time home buyer buying $1 million house. Wonderful folks, great credit. And they didn't quite have the full 20%. So we were going 15% down. Pre-COVID, high 3s, worked out great. As soon as COVID came on, that program went away. That's not uncommon right now. So what's happening, I'm finding, is we're having this conversation with folks, and just kind of like what Brian was saying, that upper end market is still in existence, and we are taking a lot more calls on the upper end market. However, these folks are able to just put more money down and live back in this conventional world of 510 and below. So they're able to kind of skirt around any of the restrictions that are coming along with the jumbo world. So the jumbo world is much more restrictive. The underwriting timelines, those are all incredibly difficult right now. And also, just a quick note on appraisals for you folks in the lending world, or in the real estate world. The appraisal process in a jumbo loan is a full appraisal. It's not just a desktop appraisal. And I'll let Brian, once we kind of unmute you, chime in on that and see if you're seeing that as well. The jumbo loan world is requiring full appraisals. So, and then finally, the non-agency portion of this process, as I mentioned, this is kind of the third track, has all but dried up. So I remember the day the pandemic kind of hit, the fear kind of hit all of us. It was kind of, we were all kind of just hanging out, and then you could see the wave just kind of happen. And all of a sudden, a lot of my investors that are kind of one-off investors just said, nope, we need a minute. And they just started restricting. And it was just one a day for 2 weeks. So that's just not uncommon. Yeah, so the third option is a bit tight right now. Those fire hall condo pieces, anything that's kind of in left field that doesn't fit that conforming conventional or jumbo conforming loan process is in a bit of a holding pattern right now. So just kind of keep that in mind. All right. So moving on to kind of what it looks like to be a first-time home buyer. Honestly, the process itself has gotten a little more restrictive, but my call to you is to talk to a lender, to pick up the phone, call a lender, schedule a face-to-face meeting, and just talk to the lender now. I personally like to have a discovery meeting. I like to sit down with them face-to-face. We don't need documentation necessarily. Let's just have a conversation. Let's build a relationship. Let's talk about your goals and your dreams and your future, and what you want that to look like. I just enjoy building that relationship first. So I would encourage you as first-time home buyers, don't be afraid to talk to more than one lender. We all want to sit with you guys. We want to talk to you. We want to educate you on the process and make you good stewards of this environment. So, but I will say the credit standards have increased. An example of that, I had an FHA buyer that had kind of shaky credit, 580 score. Pre-COVID, we could make that work with some reserves and a couple other restrictions. And the first thing to go was that. So now the minimum credit score is 620 in that particular environment. And again, that's PrimeLending. Every lender offers it slightly different. So you need to educate yourself in that process. All right. And okay, so the elephant in the room that I imagine everyone's kind of interested in talking about, we're hearing a lot of, is the forbearance process. So I just kind of wanted to talk about the forbearance piece. We're at 8.62% of homeowners in America that are under some sort of forbearance plan. That's 4.25 million Americans, last article I read there. And I'm not gonna lie, the beginning of the forbearance process was a bit of a debacle. Folks were picking up the phone and calling lenders, and they were saying, sure, we'll give you 90 days, but you owe us 4 months on the back end. And that doesn't help anybody. That wasn't that wasn't useful for anyone. So now kind of the way the process works is, at least here at PrimeLending, if somebody is in need of this forbearance piece, they pick up the phone, they call us. We'll typically set you on a 90-day. It's not a forgiveness. It's just we're going to move the payment to the back end. So we'll do a 90-day push to the back end of the loan itself. And we just ask that you pick up the phone and call us, every 90 days to determine where your situation is. So we're willing to work with you. And I imagine a lot of lenders are out there. You're going to get a little bit of resistance on the front end with those lenders. They're just, they're not super excited about the process, but we've got to help. In fact, there's penalties in place. There's a law against it if you don't. So kind of just keep that in mind. The world, there is help there, and it's incredibly reasonable. So I just don't invite you guys to if you're in trouble and you need help, to pick up the phone and call your lender. Okay. Quick note about resiliency. All of the above in my world, that all sounded pretty scary. There's a lot of restrictions. There's a lot of things going on. But just like Brian was saying, there's honestly, the buyers that I'm working with are smelling opportunity. They're, for lack of a better word, smelling blood in the water. They're seeing an opportunity and they're looking at the market, and they're realizing that inventory is low. And I'm finding that sellers are a little bit nervous and taking a back step, but they're also, every real estate agent I talk to, I'd love to kind of ask you this, Brian, anyone that did take a step back for a minute, or anyone that is selling their house now, what is their thought on this process? Are they okay with it? Are they fearful, or are they just excited to kind of make that upgrade, that next move? So in my world, folks are refinanced. They're taking advantage of these historically low rates. I'm not seeing as much of a cash grab as I thought. I've seen a few folks do a cash grab to reinvest the money, but at the end of the day, not a ton of cash grab, which I think is great. People want to keep the equity in their home if they can. And then what do I see for the future? Brian was spot on. We're in an election year. We are in a new normal post-recovery pandemic. And, people are pleasantly protesting in our streets here. It's one of those things for the next 6 to 12 months, those rates aren't going anywhere. I'd like to think they're not going to go any lower. But I really don't know. I've been shaking my magic 8-ball every day, and they seem to be kind of just holding steady. So that's how I feel about the resilience piece. And then I just want to make a quick plea. I didn't pay attention to how many people are on this call, but guys, I will just say that this time has reminded me that technology, while it's good and it exists and we're using it right now, and this is specifically a note to online lenders and kind of the online real estate shops, I have found and fielded a lot of calls where folks are reaching out to potentially do a refi with an online letter for ease of purposes, only to find out 60 days later they just never called them back, never got their loan. So now more than ever, I'm begging you to reach out to the Brians of the world and to reach out to the local guys here, the local lenders in Central Oregon to do your refinance. We're just as competitive as online folks. We'll work just as hard. We live here, we work here, we have mortgages here. So that's my final plea. So, all right, I'll shut up now. Thanks, guys.
Thanks so much, Derek. So Brian, you were invoked several times during Derek's presentation. Did you want to follow up on any comments before I went to Q&A?
Sure. Yeah. So I made some notes, Derek. Those are awesome points. So a couple things in regard to the jumbo loans Derek was talking about, harder to get. I agree. There's a lot more restrictions on getting those jumbo loans. We're finding our buyers having to shop for alternatives. Sometimes they're getting portfolio loans with local banks,
Yep.
Where the conforming third party loans are not working as well. But frankly, we're also just finding them digging deep into their pockets. That section of the buyer pools is putting cash into housing because there's not a lot of good alternatives for them
Yep.
to make other investments. They're a little insecure about the stock market, CD rates have gone down, et cetera. So frankly, in a time where we're looking at potential future inflation, real estate's a good place to park money, and we're seeing just people put more money into it for that specific buyer set. In regard to how sellers are feeling about this, what we saw a lot of is when there was insecurity, they just pulled off. And I think that's one of the reasons we're seeing decreased inventory on the market right now. People were just unsure with what's happening. And that was that note that I said earlier, where I'm hoping we see a little bit of a push of houses coming on the market this fall. For the sellers that didn't need to sell, they said, I'm not going to partake in this. I don't understand what's happening. It's too scary for me. I'm not going to put my house on the market. I'm hoping that those homes come on the market either later this year or next year. And we'll see a little bit of an ease on that demand, or a little bit of supply for that demand. And then, what else we talk about? So I think those are kind of the two main points that I made notes on. But if anyone has any other questions, I'm happy to answer it.
Yeah, there actually are a few questions in the queue. I want to go ahead and get to those if we could. And you folks can self-select here and decide amongst you who's best to answer, or multiple folks. So question about what's happening with housing on a more regional basis. Is there more inventory available in outlying communities rather than urban centers that might help reduce the inventory problems in Bend?
Just looking at things quickly, Redmond does have more inventory, but their housing prices are also going up a little bit faster. So it's, at this point, we're not seeing anything substantial out there that's going to really alleviate things, but going through May into June, we can revisit that. Brian might have some more thoughts about where they might be sending some buyers if need be.
Yeah, we're looking everywhere. We're looking high and low for inventory. And, I want to make it clear that I'm extremely compassionate for those that are looking for affordable housing. I think that's one of our biggest issues in this town. And I think it affects everything. I think it affects employers and their ability to hire. I think it affects family planning. I think it's so integral into the future health of our town that that's something that we need to continue to address. And that's going to be something that we fight as a community, or fight for years to come. There's a lot of cool things happening. There's some middle housing workforce that, or workforce housing studies that have been done by COBA and Central Oregon Association of Realtors and OSU and the Chamber. And there's all these great things that are happening of trying to provide different housing types and at different price points, but it's a challenge. We are seeing people going to outlying communities. As Kim mentioned, Redmond is a good alternative, Lapine, et cetera. But what it really comes down to is we don't have enough housing. And really from about 2009 to about 2013, 14, there was very limited construction. And I did a little webinar on this last week. And when we looked at the amount of building permits, still have the permit for the peak, we might all see a lot of construction happening. We're far behind the stock that we need to meet demand for the people that are living here currently, much less any growth or migration into the market. So that's a challenge. People are moving elsewhere. But, to be a whole community, we need that housing here.
I think that next question is about affordable housing possibilities. And it's, you can do a whole webinar, if not multiple ones, in affordable housing in Bend alone, and then regionally, nationally. But when you talk about affordable housing, you obviously have the subsidized products, and then you have just the housing that is affordable to the median income earner. And we know we have some pretty severe deficiencies in both. There's some great projects coming online. Redmond has a good one that our congressional delegate or state congressional delegation worked on. Bend has one. There's, when Discovery West gets put in, there's some affordable opportunities there. But they're quite frankly, they're drops in the bucket, and we all feel that when you're talking about a couple hundred units and housing stock it's down so much. So it's going to continue to be a tight part of the market. If you're working with a lender or a realtor or someone in a neighbor impact, that sort of thing, to really set yourself up for success. We have a lot of great nonprofits here you can work with. They, a lot of them took a break for April and weren't building. So they're also going to have to get back online and be a little behind. But I think a lot of our affordable housing issues will continue to come down to public policy and what type of products people are willing to look at that might be a little different than what they were thinking of before.
Yeah, and I'm just going to second that motion. This is a public policy issue, and while it doesn't solve the problem today, everyone voice up, make your concerns known. There's all kinds of ways to get involved, from your neighborhood associations through the city, through boards like Bend 2030, which is now Bend 20 or Vision 2050. Make your voice heard, because obviously there's a demand for all these types of housing. It's not cheap and easy to do. That's why the builders always struggle to put it up, because all this multifamily housing is often very expensive and doesn't necessarily pencil. But as the value of the land that we have remaining within the city exists, we're going to see more housing like that. And then I guess my final plea is that we all take a pause before we become anti-growthers, in the sense that if we become NIMBYs, we're only going to make the problem worse, and we're going to become less of a whole and real town. And we need to encourage ourselves that we need to kind of be yes in my backyarders. And we need to figure out how to grit our teeth and say, okay, this is going to be a new apartment complex right next to my house that I have always envisioned as a field. And we all need to make some sacrifices if we want housing affordability for all the service providers and all the workers, from teachers to police officers, et cetera, through our town. And we just start, we're all in this together, and we don't get that clear separation of saying we don't want growth, we don't want change, we don't want traffic, but we want affordable housing. And that's that thing that we're, me especially, we're all a little hypocritical in our mind of what we want. And we just all need to dive deep and be realistic on what what we need to do to make this a great town going forward.
Yep. This is something the chamber has been tracking for a number of years. So thanks for all that, Ryan. So let's stay on this topic for just a minute, because we have a question in the queue about multifamily housing. I had that on my list as well. So I know a lot of product came on in Bend this year, and there's a lot in the making. But so from the standpoint of folks who want to be in the housing market, but may not be ready, especially with the times that we're going through right now, what's the availability? What are the projections for increased availability and the demand that goes along with that? There's telecommuters buying homes. There's people coming up from different places around the US and the state who want to get away from urban centers, as you all, I think, mentioned. What is your big picture of the multifamily market?
No one else is speaking up, so I'll jump in, but I don't have a good answer to that. What I'm seeing, and like Kim said, it's a little bit of a drop in the bucket, but some exciting new projects from what's happening along, Century Drive and Discovery West and things like that, where there's, new multi-level, multi-use types of property coming on. But the demand is there for sure. Whether we can deliver enough to meet that demand, that's the only issue, and at what price point. So unfortunately, I don't have the data, at my fingertips of which projects are coming on when. I do know that I was speaking with Brian Rankin, who's the long-term planning manager for the city of Bend. I was speaking with him last week, and it's definitely built within the code that when builders or developers want to develop the remaining land that's within the urban growth boundary, they have to get creative, and they have to bring on a lot of new housing types that they didn't have to address in the future or in the past. 10, 20 years ago, it was the lowest common denominator of stamping out 12,000 square foot lots and doing one level 1,800 square foot homes, et cetera. And they're having to get more creative and go vertical with more housing types. So I think we're going to just see more of it in the future. The exact number, I don't have that on hand, but the demand's there.
Kim, did you want to add anything to that?
Yeah, just we keep hearing, it feels like you keep hearing about projects, and then it takes a lot longer for the multifamily housing to get developed. Especially when there's just so many more factors that go into it. And right now, a commercial broker could get more into it, but I imagine the financing picture is a lot different than what we're talking about at the residential level, because you're talking about multiple millions of dollars. So again, in Bend, we're going to continue to look at the areas that were brought in, or the opportunity areas of the UGB, and that Bend Central District piece, which I'm sure we could probably still talk about a year from now and what's going on there. But there's so many more factors coming at multifamily. But we've seen some projects that I never would have thought were possible, even this past year, that are pretty exciting. So I think we'll continue to see, that more multifamily, more mixed use is a pretty big theme.
Thank
Yeah,
you.
my gut feels that as long as land was inexpensive enough and the zoning allowed for it, it's the easiest to do single family, low density housing. But I think we've crossed that threshold with the value of land within our borders and the demands put on it by the city. I mean, and the city did not do that last urban growth boundary expansion lightly. There's a lot of demands, a lot of planning involved. I think the future of Bend and future of what housing is going to change drastically over the next 10 years. And we all just need to, be part of it and, let our concerns be known.
Yep, thank you. Hey, Derek, there's also a question in the queue about the ratio of, and you may, or somebody else might have an answer on this, ratio of cash purchases. Are we seeing a lot of that?
Yeah, unfortunately, I'm not going to be able to speak to that because if it's a cash purchase, it didn't.
You're not going to hear about it, right? Okay.
Kim and I were just talking about that before
Yeah.
before this webinar started, but unfortunately, I don't think she checked that
So
box either.
we can pull stats on that.
Yeah.
That's going to be when a house sells. So the stats we're looking at right now would more reflect kind of that just pre-COVID market period. And then coming into June, we'll see if the houses that went pending in April, and then in July, the houses that went pending in May started to see a shift there. But going into this, we actually were seeing a decrease in cash sales overall. I don't know if Brian.
Yeah, I will just touch on real quick, just kind of what Kim said, and then I'm going to pivot to Brian as far as the cash portion goes. I am doing a ton of lending to folks that can and have more than enough money to pay cash for a home, but the rates are so low that they're just saying, yeah. I mean, I've got $1.5 million purchase and they're taking out $300,000 loan. It's just, they don't need it. They're taking advantage of an opportunity right now. And I would actually ask Brian, of the sales you're doing, being the Les King of Central Oregon, what's that cash ratio look like to you from a cash to lending ratio?
I don't have the exact stats at my fingertips, but what I am seeing is anecdotally what Kim said is that we were seeing more people use loans coming into the first part of this year with these rates, just strategically for people. 3% money. If you look at inflation, it's almost free money when people take tax implications into it. But we did see a decrease, especially in the last couple months, just because it was complicated. They couldn't necessarily go get an easy jumbo loan. And so we saw more cash being put in. But my guess is that if we stay at these rate and lending guidelines, ease or, become more regular, we're going to see people continue to take advantage of these rates. I mean, there's no reason not to.
Yeah.
Okay, thank you for that. Just wanted to end up with a couple of questions/comments that are in the queue that's all about affordability. And so, Brian, you've been hitting on this pretty hard. And knowing that there are other folks from other places that are going to come in here, that medium income is a little bit higher, affordability is going to continue, as you mentioned before, to be really important. One last question, and we are going to have to wrap it up here. Do you expect an increase in foreclosures as unemployment extends? You talked a little bit, Derek, about forbearance. So nobody really knows how long that's going to last, that protection is going to last. Any insights on this?
Yeah, I would say yes. Unfortunately, we're going to see something like that. There's going to be a little bit of a spike, just in my opinion. The CARES Act does have a year of forbearance in place. So I pray and I hope that the lenders will continue to work with folks, and that folks will continue to understand that the lenders do not want the house back. They just don't. So they're going to do whatever they can to work with you in this process. But there's it's inevitable. I'd like to think here in Central Oregon, we're not going to see a massive influx of it. But at the end of the day, I really don't know, other than you can just feel that if we've got, 4 million Americans in a forbearance process, what's that look like for them in the future? So.
Yeah. And it's almost time to wrap up, but I did think of one more thing, Kim. So realtors have also been affected by the coronavirus, and they are the invention of work from home. But with the decrease of inventory and restrictions, any general observations from the realtor perspective of income expectations or change of operations and practices that might affect that field?
Yeah, so we have, for our members, we've done a couple webinars and that sort of thing on how they can get the unemployment opportunities for independent contractors, since that was in place. And initially we saw in April a lot of interest in that, and I think people feeling like they were going to have to take that opportunity. And then going into May, we actually haven't been getting a lot of questions about it, and I don't think that's because the state's answering their questions. So I think people are feeling a little more steady about it. We, as with many industries, we have 2,500 members, but probably 10 to 20% of that is super active. So we haven't started to see membership declines. We might coming into the new year when dues come up and that sort of thing, but we aren't feeling tremendous pressure from our members yet that they feel their income coming down. That to me is a confidence that they think going into summer we're going to see transactions.
Okay, thank you. So Kim and Brian and Derek, really appreciate your time today. This has really been an interesting discussion. Hoping to keep folks appraised on impacts and growth and bumps in the road for real estate in the future, and hopefully we'll have some sort of event coming up soon. As we at the Chamber work through what is an event nowadays, a real one, not just virtual. I want to thank you all again. And I do want to let folks know that we are putting on a special webinar on Monday at noon. You'll be seeing some information about this in alignment with the Governor's Regional Solutions Team and Emergency Services, the Health Department, letting folks know what Phase 2 guidelines are looking like as they firm up in outdoors, events and venues, and also some updates for restaurant operations and other areas that we want to bring out to you and share as we go into the Phase 2 round. So that'll be Monday at noon. Annette Liba is joining us and others. And we're looking forward to sharing what the latest and the greatest is. All this will be posted on centraloregonsos.com as well. Want to thank everyone again for coming today. Be safe out there and enjoy your weekends.
Thanks, Katie. This was great.
Yeah, thanks.